I think Twitter now, I mean, writing's on the wall into the court case, and I think Musk has raised more capital. We believe they don't even step in the court. I mean, we ultimately believe that Musk does buy Twitter before the court.
If not Apple, what would you be encouraging the investors watching to be getting into at the same time?
Well, of course, my fund GK has Tesla and Apple as their top holding, so you get both. But we look at that as the future, and Tesla is the future. And it reminds me so much of Apple at the beginning, but it's even a better company. So, you know, we really, at my firm and my personal beliefs are we focus on long-term growth, and what we do in America that's great is technology, and we export it throughout the world. And you look at a company like Tesla expanding throughout the world and the success they're having in China and they will have in Europe. And boy, you know, we're in inning 2 or 3 of this incredible company's growth.
No, and I think it continues to be, it's noise, it's a negative. You don't want to see it as an investor. You want to see him focused on production and the Tesla story. And that's why these sideshows, and especially what we've seen with some of the stuff that he tweets, I think overall it's clearly been a negative, and it's something that investors have gotten frustrated with.
In this video, 2 Tesla bulls weigh in on Tesla stock, and Tesla customers come together to help Tesla pull off their big PP. Wait, did I say that right? Yeah, no, that is right. Are you confused? Good. Let's get into it. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks. Check out the links in the pinned comment below. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. So check out the links in the pinned comment below, and thanks for your support. Okay, so here we are on the Tesla website. Join the Tesla Virtual Power Plant, aka VPP, aka just PP, because in the future this is probably the only kind of power plant we're going to have. Distributed ones, virtual power plant, so the virtual will become superfluous, hence Tesla's big PP. I'm really going to have to restrain myself from making jokes today, guys. I mean, this is just a gold mine. It's going to be hard. I must control myself. So let's read a little bit about this. Participate in the Emergency Load Reduction Program. Oh, the jokes I could make. And if they've gone over your head, it's probably for the best. Participate in the Emergency Load Reduction Program pilot offered by Pacific Gas and Electric Company, PG&E, and support the grid while also earning compensation and maintaining your energy security. Become part of the largest distributed battery in the world and help blah, 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 blah. If you guys want to pause the video, go for your life. I've covered these in detail in previous Tesla videos. We've had a massive breakthrough, a huge event in the recent days. So let's cut to the chase and then we'll work back from there. Here's a tweet from James Locke. Wow, that's what I call an impressive virtual power plant. 268 homes selling 1,535 kilowatts to the grid from Powerwalls. As we can see here, people who participated in this virtual power plant at the point that this video was recorded, 268 fleet homes, that's right, fleet homes, so they've got an EV fleet, a bot fleet coming soon, also a fleet of homes able to supply energy. This is serious business, ladies and gentlemen. We're seeing a sneak peek of the future and why the opportunity in terms of energy that Tesla's going after is massively underrated. Let me put it on the record, because it's going to happen over the next 10, 15, 20 plus years. Centralized power plants, see you fucking later. Distributed power plants, virtual power plants, this is the future. I know the text is a little bit small here down the bottom, but I'm going to read it for you. Tesla virtual power plant with Southern California Edison. As part of California's largest virtual battery, you help keep energy prices low and reduce use of fossil fuels. During events, you earn $2 for every incremental kilowatt hour sent to the grid from your Powerwall. Note, 268 fleet homes at that point. However, there's more. This tweet from Jennifer. This is pretty amazing. Active event, 2 hours left, discharging. At the point of this video, 2,342 fleet homes providing 15,185 kilowatts of energy. This is serious business, and I mean that in the most literal sense. Business. Now, if you're a little confused, don't worry. As I said, we're starting at the end and we're going to work back from there and add a little bit of groundwork and understanding. We're over on the electric website now. Quote, Tesla's virtual power plant had its first event helping the grid. Looks like the future. Tesla's virtual power plant in California had its first emergency response event, helping the grid by pooling power from Powerwall, as in Tesla Powerwall owners around the state. The event appears to have been a success, as the distributed power plant looks like the future. It sure fucking does. A virtual power plant, or VPP, and again, in the future it's just going to be PP, centralized power plants, gone. Yeah, there'll be a few exceptions, but not that many. consists of distributed energy storage systems like Tesla Powerwalls used in concert to provide grid services and avoid the use of polluting and expensive peaker power plants. For those who don't know, the watered down version, what is a peaker power plant? Well, when everyone gets home from work around the exact same time every single day, in the middle of summer, it's hot as fuck, they all turn on their air conditioning. This means there's a much higher demand for power, but you may not know this, and I can't believe this is still the way the world works. Today, essentially all power that you use at home or anywhere is generated on demand, meaning if there is a surge in demand for energy, for electricity, for power, more power plants need to come online at that exact moment. I'm not even fucking joking. This is so bizarre, but this is literally the way the world works right now. If somebody isn't burning coal on the other end of your power point, so to speak, and again, we're boiling it down, at the time you need the power, no power for you, big problem. Peaker power plants can provide energy very quickly during these peak demand times. Generally speaking, this energy is much more expensive and terrible for the environment. This is literally the way things work today, as opposed to, I don't know, storing energy in batteries, so when people need it, it's stored in a battery instead of you needing to fire up a fucking dirty, polluting coal peaker power plant or something along those lines. Clearly ripe for disruption. Last year, Tesla launched a VPP pilot program in California where Powerwall owners would join in voluntarily without compensation to let the VPP, virtual power plant, pull power from their battery packs when the grid needed it. It helped Tesla prove the usefulness of such a system. Following the pilot program, Tesla and PG&E, the electric utility covering Northern California, launched the first official virtual power plant through the Tesla app in June. This new version of the Tesla virtual power plant actually compensates Powerwall owners $2 per kilowatt hour that they contribute to the grid during emergency load reduction events. Homeowners are expected to get between $10 and $60 per event. Let's take a moment here. Without getting too far into the weeds, at a really high level, you might think, well, hang on, where does this extra power come from? Two answers. One, perhaps you're generating your own power at home, maybe solar panels on the roof stored in your Tesla Powerwall, hence a surplus of energy, not just for the own needs of your household, but you have a surplus. You don't need the extra energy. What are you going to do with it? Well, Tesla's going to allow you to automatically print money while you're asleep by participating in these events. In addition, and this is where things get batshit insane, you don't even need the solar. If you have a Tesla Powerwall, and again, depends on where you are in the world, but this is a long-term vision. If you have a Tesla Powerwall, just sitting there, a gigantic fucking battery in your home, Tesla actually has written software to check the price of energy, the spot price of energy at that moment. For example, again, going back to the example, everyone gets home, turns the air conditioning on, you got peak demand for energy, meaning you've got peak prices for energy. But at 4 a.m, most people are asleep. There's very low demand for energy, meaning the price of energy falls. Do you see where we're going with this? Tesla's energy software can literally pull surplus energy or pull energy from the grid at the lowest price in the middle of the night, 3, 4 a.m, when it's cheapest. Store that energy, and then later, you see where we're going, don't you? At peak times, when the cost of energy is its most expensive, battery can now be providing energy back to the grid when it's needed and compensating owners generously for the surplus energy. This is called energy arbitrage. In short, you don't even need the solar. Just with the Tesla Powerwall and software, you can automatically, in your sleep, literally in your sleep, have this thing pulling energy at the lowest price point and then selling it back to the grid at peak price points, performing energy arbitrage, automatically making you money. It's a literal fucking money printer. And again, I want to emphasize, in theory, you don't even need to be generating your own power. You can just pull it from the grid at the right time and sell it back at the right time. Of course, generating your own energy with rooftop solar, etc., adds another layer to this. Just think about this in the future. The compelling case. Much like Tesla wants to allow everybody on the planet, in theory, to be able to afford an EV because when they're not using it, it can go out and do robotaxi fares autonomously and make you money in your sleep, therefore paying for the entire cost of the hardware. So too, owners of a Tesla battery and or solar can do likewise. Tesla's trying to make their products an absolute no-brainer. How? By allowing them to literally pay for the entire cost of the hardware over time. So 420 IQ shit right here. Earlier this week, we reported that Tesla's California VPP expanded to Southern California Edison and now covers most of the state. Let that one sink in. Just days later, the Tesla VPP had its first emergency response event. Tesla reached out to Powerwall owners who opted into the program through its app yesterday to warn them of the event and give them the option to opt out if they needed all the power from their Powerwalls today. We can see a few screenshots of how this looked. On the right here, we've got an active event. Grid load reduction starts August 17 at 5 a.m, ends August 17 at 9 p.m. Blah, 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 blah. You will be compensated for your Powerwall's contribution to the grid during this event. For SCE, Tesla's virtual power plant was outputting as much as 1.5 megawatt hours of power at one point during the event. PG&E released a flex alert request for voluntary conservation on energy yesterday. Quote, with hot temperatures and high energy demand across California, and an archaic dog shit, out-of-date, insufficient grid. Sorry, I think I read that right. The state's power grid operator is asking residents statewide to voluntarily conserve electricity this afternoon and evening, when the grid is most stressed due to higher demand and energy supplies are tighter. Now Tesla's VPP is another tool that they can use to address the situation and avoid brownouts. So I just want to take a quick moment here to ask one question. Of all the Wall Street stock analysts covering Tesla stock, how many of you have heard them talk about virtual power plants, Tesla becoming a distributed utility, or their energy business? Now I have another question. This requires a little imagination. Let's fast forward, let's say 15 or 20 years into the future, when many hundreds of millions of homes across the planet have rooftop solar and or a home battery. Just imagine being a company that years earlier, in fact around 15 years earlier, had already initiated the first virtual power plants, had refined and honed their software over that course of 15 years. And just imagine said company was taking a very small slice of every dollar involved in energy generation and or storage and or supply. Would it be fair to say that this company may in fact be sitting on a gigantic multi-trillion-dollar opportunity? When I first showed this list of the world's largest companies by revenue nearly 3 years ago on this channel, well, it was a very, very different looking list. But I can still make the same point. We're just seeing a little bit of progress in the inevitable direction. So, you may notice a little bit of a common thread on the world's largest companies by revenue, excluding Walmart, which is a retail company. Number 2, State Grid, an electricity company. Electricity, virtual power plant. That's the same shit. Interesting. Number 4, an oil and gas company. Wait a minute. Oil and gas, isn't that used for creating energy? Geez. Something interesting. Number 5, also oil and gas. How curious. 3 of the world's 5 largest companies by revenue as I record this, directly in the crosshairs of Tesla's virtual power plants. Don't think about that too much, it might hurt your head. If we continue to scroll down this list, as I said, the first time I recorded this, nearly 3 years ago, it was something like 8 or 7 of the top 10 were oil and gas and or energy companies. We're seeing this shift happen in real time. Number 14, Saudi Aramco, oil and gas. 18, oil and gas. 19, oil and gas. 23, oil and gas. Let's play a fun little game called Who's in Tesla's Crosshairs? Let's count here. 1, 2, 3. Look, an automotive company. Almost forgot Tesla does that too. And another one. Let me count here. Out of the world's 10 largest companies by revenue, 5 are directly in Tesla's crosshairs. Not 1, not 2, 5. Let's scroll a little bit further. We've got another one, oil and gas. Let's keep having a look. More oil and gas. More oil and gas. More oil and gas, and finally, more automotive. This is a little bit unusual. I don't think you'll find a company on the planet going after larger combined opportunities than Tesla. And this is before the Tesla bot. Let's not even get started on that. Of course, when Elon says that he believes over the long term Tesla's energy business will grow to be around the same size, perhaps even larger than the automotive business, he's obviously a lying fraud, and you should not trust him, because clearly there's no way this could possibly happen, because there's zero opportunity in the energy market, as we've just seen by the world's largest companies by revenue. And if you disagree, you're just an Elon fanboy. And now, in entirely unrelated matters, I have somehow ended up on the Tesla Energy subsection of their website, Tesla Energy Software. Tesla has developed an advanced ecosystem of software to support its energy hardware products. Seems like there's a few parallels between Tesla's energy products and software versus their vehicles and software. It's probably nothing. Drawing on over 15 years in battery performance technology, you did it, Mary. Oh wait, no, that's not about GM, is it? Tesla has tailored its software specifically for energy products and improved performance through management of gigawatts worth of sites operating in 50 plus countries. A few isolated islands here, including Australia, some decent progress in the US, and a tiny bit happening in Europe, not to mention a few specs popping up in Africa. I wonder what this is going to look like in 20, 30 years. Now, I know this is a little bit nerdy, but it's really worth understanding if you own Tesla stock or even considering investing in the company. A common software platform powers the entire Tesla product ecosystem, from Tesla's largest storage product, Megapack, to virtual power plants made up of thousands of Powerwalls. Beyond energy storage, Tesla software also supports solar, vehicle charging, and non-Tesla assets required for operating microgrids and utility-scale power plants. Words matter, and these 4 are particularly intriguing if you can do the mental math. I certainly wouldn't want to be a utility when I read this on Tesla's website. Let's leave it at that. Tesla's suite of optimization software solutions, autonomous control, is composed of machine learning, forecasting, optimization, and real-time control algorithms used for utility bill reduction, demand response participation, we saw an example of that today, microgrid control, and wholesale energy market bidding. Tesla's autonomous control algorithms automate the dispatch of energy assets to maximize economic value. Autonomous control products driving value to customers today include, and by the way, just to be clear, these are Tesla products today that most of you haven't heard of, unless you've already seen my deep dive video on Tesla Energy anyway. Autobidder, aka Money Printer, Opticaster, and microgrid controller. Tesla has also developed software to enable more renewable generation on the grid with features such as virtual machine mode. But remember, Tesla is just a car company. I'm going to skim through most of this. I've covered this in detail in the past. If you guys are curious, just head to tesla.com/support/energy/Tesla software or use Google. You'll end up on the same page. Just a few key highlights. Under benefits of Tesla Energy software, Tesla is the world's only, one more time, the world's only major vertically integrated energy storage provider. Unique, seamless integration of hardware, firmware, and software means industry-leading performance. Oh, fancy fucking that. Tesla, industry-leading in energy, not just vehicles, not just everything. Everything they touch, industry-leading. I mean, prove me wrong. What's something that Tesla does today in which they are not industry-leading in terms of hardware, firmware, software? Oh, wait. No, I ain't. Waste of time. Reliability and over-the-air updates to deliver continued improvements and new features over time. Let's skip ahead a little bit. Now on to Autobidder, aka the Money Printer. Autobidder provides independent power producers, utility and capital partners with the ability to autonomously print money, aka autonomously monetize battery assets. Remember earlier I talked about pulling energy, selling it back to the grid, blah, blah, blah? This is what we're talking about. Autobidder is a real-time trading and control platform that provides value-based asset management and portfolio optimization. In other words, if you own batteries, whether it's a home battery or more likely a large-scale battery for your business or your utility, that's what they're talking about when they're referring to assets. Asset management and portfolio optimization, enabling owners and operators to configure operational strategies that maximize revenue based on their business objectives and risk preferences. PowerHub, not to be confused with its slightly more erotic twin, is an advanced monitoring and control platform for managing distributed energy resources, aka virtual power plants, renewable power plants, and microgrids. We'll skip ahead even further. More information on the microgrid controller. You want to pause, read it, go for your life. Let's keep moving forward. A quick note on Opticaster. Some pretty boring lingo here, but the long story short, when Tesla's talking about Opticasters being intelligent software designed to maximize economic benefits and sustainability objectives of distributed energy resources, again, Tesla's software can maximize how much money somebody can make from an existing asset. This is no-brainer stuff. If Tesla knocks on your door and goes, hey guys, see this asset you've got? Our software can allow you to maximize how much money it can produce for you. Would you like to make more money than you're making now from your existing asset? Yes or no? Okay, are you a moron or not? You're not a moron? Okay, well, here's our Opticaster software. Let's work something out. Great. And there's also information on virtual machine mode. Again, please pause if you want to read this in detail. Otherwise, this video is going to be so ridiculously long. Just finally, I know there's a few Tesla Q virgins who are going to explain that, hey, I've never seen this software. This technology doesn't exist. Tesla's a fraud. Fuck you, Elon Musk. I hate you and myself. Well, here's a shot of Autobidder software in action. Again, pause if you want to look at all the nuance. I just want to make the point here. This is real. This isn't pie in the sky. This is not in the future. We plan to do this. Shout out to Trevor Meltdown Milton. This is real technology, real software, really being used by Tesla's real customers today to manage energy generation, storage, and supply. They are not messing around. This isn't an idea or a concept for the future. It is happening literally right now. And now, if you're still here and haven't fallen asleep, time to switch gears. Let's hear from two Tesla bulls discussing Tesla stock, Elon Musk and Twitter.
If not Apple, what would you be encouraging the investors watching to be getting into at the same time?
Well, of course, my fund GK has Tesla and Apple as their top holdings, so you get both. But we look at that as the future, and Tesla is the future, and it reminds me so much of Apple at the beginning, but it's even a better company. So, you know, we really, at my firm and my personal beliefs are we focus on long-term growth, and what we do in America that's great is technology, and we export it throughout the world. And you look at a company like Tesla expanding throughout the world and the success they're having in China and they will have in Europe. And boy, you know, we're in inning 2 or 3 of this incredible company's growth.
Despite all the drama that's playing out with Twitter, despite credibility issues with Elon Musk, his tweets keeping us busy day in, day out.
Well, I say thank God Steve Jobs never had Twitter, you know. But I think it's really hard to imagine a genius like Elon Musk being normal, and people have to come to terms with it. You know, I spent a lot of time in the music business, and I can tell you Elon is a very normal guy when you walk around LA, actually. So I think people should just get used to it. He's a little bit crazy, but he's a lot of fun.
Well said.
Just quickly, in terms of the Twitter valuation, because I've got to bring it back to just the regular investor watching, is 900 too rich of an entry point, or should they just be waiting a little bit, seeing if it, perhaps buying the dips is basically what I'm suggesting?
Yeah, once again, I've been trading stocks my whole life, and trying to tell you what day is the best day to buy Tesla or Apple, it's impossible to do. So what we do is dollar cost average. So if you want to buy Tesla, you should buy some Tesla now and just don't make a huge stock commitment to it. And then, we'll buy it like every week or every month, depending on your plan, and add to your securities positions monthly is the best way to invest no matter what, and doing it over the long term. So when you have these corrections like we saw in the last quarter, which were really bad, and now these recoveries, if you don't think about it and you just buy every month, you can end up making some great purchases.
It is hard to argue with that. As we can see, I've been buying Tesla stock with every spare cent. And when I say with every spare cent, I mean when I have a spare cent, I buy Tesla stock. This is, in essence, dollar cost averaging, as you can see on screen now. Every transaction I've made this year, 2022, Tesla stock, the column I want to focus on, the percentage gain or loss on every transaction this year. Very first transaction in 2022, currently down 16.66%. A few transactions later, down 8%, down 8%, down 7, 6, 6. But I'm up 9% on this, 7% on this, 13% on this, down 7% on this, up 1, up 8, up 46%, up 41%, up 24%, up 20, 29, blah, blah, blah. Over the long term, consistently buying tends to even out. If you happen to be buying a stock that has great growth potential, you buy when you got money, aka dollar cost averaging, and you're not an emotional infant, you actually have a reason why you're investing and the reasons make sense, things tend to work out okay over the long term. And just keep these numbers in mind. Probably the best return here, 46%. And the worst down, 16.5%. If we rewind the clock just a little bit to when I began purchasing Tesla stock in 2016, similar number of transactions spaced out between 2016, 17, 18, and 2019. Let's focus on that percentage return column once again. On these transactions, I'm up 2,000%, 1,700%, 1,600, 1,700, 2,200, 2,100, 2,300, 1,900, 1,400. Obviously, I was buying at very different prices for these varying returns. But over time, like I said, if you're consistently buying an asset, your investment thesis is sound and it tends to trend up over the long term, things generally will tend to work out. So while many investors wait on the sidelines, hoping to time the market and buy the dip, I'm actually looking into the future. Where do I think Tesla's heading? Then coming back to the present, going, do I really give a flying fuck if I'm paying 1,200, 900, 600 at today's prices when I think in 10 years' time we're going to be looking at 10,000, 20,000, 30,000 plus per share? Something to consider.
And your target on Tesla is about 1,200, or what time horizon?
Yeah, like if Tesla hits 1,200, that would be the maximum price I think it's worth today. And so we would probably take some profits there.
On this point, Ross and I vehemently disagree. Now, don't get me wrong here. From Ross's point of view, he's managing money for other people who aren't confident enough in their own investing decisions and capabilities. They're handing him money to manage, and no doubt they're probably expecting a return. But I just have to say it. In 20 years' time, every single person on the entire fucking planet, maybe even including Mars at that stage as well, whoever sold any Tesla stock to lock in a profit, I think is going to be riddled with regret. Oh man, I wish I didn't do that. After I paid tax, I should have just kept it. But again, want to be clear, I manage my own capital, Ross manages money for other people, so it's a little bit different. But the question I always have, if you're going to lock in a profit, 1, have you considered the tax implication? Yes? Great. So you realize that in order to replace that money in a different asset, you'd actually need to put more money in. So you already need a better return just to match what you would have had if you kept it. And the other question is, now that you've locked in your profit, what are you going to do with the money? What else are you going to invest in that's going to produce a better return? Never mind the fact you have to invest even more just to account for tax. And again, I do want to be clear. You can't go broke locking in a profit, but in my opinion, you also can't really create substantial wealth over the ultra long term. How many people who've ever sold any Amazon stock or Apple stock who are long-term hodlers and didn't ultimately put their proceeds into Tesla stock, finding a greater opportunity, which in some cases can actually happen? How many people do you think who owned Amazon and Apple stock for a period of a few decades and then sold 10, 20 years ago? How many of those people do you think are glad they sold their stock? How many of these people think, oh man, I'm really glad I locked in those profits, and then didn't know what to do with the money and just kept it in cash? Yeah. I want to make a bit of an observation. I've noticed a bit of a trend. There's a lot of investors out there, I use the term relatively loosely, who have this psychological bug. It's like a glitch in their software. Oh my god, my stock went up 10 times. I have to sell and look in the profit. That in and of itself is idiotic. Let me explain. If you look to the future and you weigh up the potential return you're expecting to see from here forward, and it doesn't make sense to hold, then sure, that's a totally different matter. But if you're just having a knee-jerk reaction, it went up, therefore I need to sell and lock in some profits. That is kind of dumb. Like I said, you can't go broke locking in some profits, even if it's dumb. But I think most investors who sell a stock to lock in a profit are doing so because of how much it's gone up, not what does the future look like.
But, once again, Tesla is a long-term holding for us, and we expect earnings to grow substantially over the next 5 years. And so, we're long-term investors, and we like to buy low. Like we just had the opportunity, and we hope to sell high. But in general, Tesla, we think, is worth between $900 and $1,200.
Let's talk about Tesla and Twitter and all things Elon Musk.
When we look at Tesla, I mean, my view there is that similar as Apple, since the April and May shutdowns that we saw in China, you're now seeing robust production coming out of Giga Shanghai. And that's important for the overall production story to get on a run rate for 2 million units into next year. You put that together, $1,000 is our price target.
Dan Ives is such a head scratcher. $1,000 per share price target. What a fucking joke. Let's fast forward 12 months time. Let's see what his price target is. You know what? I reckon he's going to raise it at least 3 or 4 times between now and then, chasing after Tesla stock. Somehow managing to justify the price target increase, not because, it's worth more than a price target, but instead, robust growth in China. Robust profit margins. Robust demand. I can't figure this guy out. Sometimes he says things that make so much sense, but then the price targets are just like, what? Huh? What? Just to put this in context, as I understand, with a $1,000 price target over the next 12 months, Dan Ives and Wedbush expect Tesla stock to move about 10% from where it is today as I record this, over the next 1 year. Here's a bet, on the record, keep me accountable. My bet, and that's all it is, I could be wrong, my bet is that over the next 12 months, Tesla stock will increase close to 100%, 10 times more than Dan Ives' 10%, give or take. I'm happy to be wrong. I'd love to be wrong. In fact, the cheaper I'm buying Tesla stock in a year's time, the better. But I just want to point out the absurdity of this price target. I don't understand where Dan Ives' head is at on this. And I'm not trying to be rude or insulting or demeaning. I don't understand what the fuck the guy's thinking. Other than, here's a good business strategy. Let's just incrementally chase Tesla stock with our price target so it can remain relevant and in the news constantly. Tesla gets to 1,000. Dan Ives, it's 1,100 per share now. Tesla stock gets to 1,100. Now it's 1,250 per share. Tesla stock gets 1,300. Now it's 1,450 per share. And on and on and on and on and on.
You'll have the 3-for-1 stock split next week. And this is another one. I mean, what Musk has been able to do is really navigate the shortages, supply chain, zero COVID shutdown really better than any automaker out there.
Would you say to buy Tesla stock today ahead of the stock split that it's imperative here?
Well, I do look fundamental. You've talked about stock splits, obviously that could have positive near term, but fundamentally is why we're bullish on Tesla. It's why we're bullish on Apple. And I think as we go into the second half of the year, it's China, China, China. Because if China demand and production ramps, despite all the backdrop, Fed economists could debate how many rate hikes. I think these are two stocks that move higher from here.
Understood. And then when you look at what's going on with Twitter, Elon Musk and what happens there with that, you said last time, I think you said you wouldn't really touch Twitter at these levels at this time.
Well, I think Twitter writing's on the wall into the court case, and I think Musk has raised more capital. We believe they don't even step into court. I mean, we ultimately believe that Musk does buy Twitter before the court, because I think it's a weaker hand legally speaking. Twitter, I think, knows that they have a strong upper hand. And that's why it's our belief that the deal could potentially get renegotiated down to $50, $51. But I believe ultimately Musk acquires Twitter before they ultimately go into a Delaware Game of Thrones battle.
Oh, so they're going to do it, huh? You think they're coming and going to do it around 50, 51. So that'll be interesting, too, if that happens. What do you think of Elon? Yeah. What did you think of the Musk tweet about Man U?
Look, I think it just speaks to Twitter for Musk as a double-edged sword, right? I mean, it's been a positive, but obviously things like that create more and more noise. And I think for him, it's all right now.
Okay?
I mean, look, he's spending no, and I think it continues to be. It's noise. It's a negative. You don't want to see it as an investor.
Now, I'm going to go against the grain here. I actually do like to see this as a Tesla stock investor. Why? Well, I would like Elon Musk to be a human being rather than a CEO. Understand what I'm implying there? I'd much rather the guy running the company in which most of my net worth is to be an actual genuine human being with a sense of humor who can laugh at himself and others than an uptight, bland, vanilla, templated CEO with a stick up their ass. But hey, that's just me. Speaking as somebody who also tries to be a human being rather than a bland YouTube wanker who won't do anything that offends anyone in his audience because, oh my God, please subscribe to my channel. For the algorithm. Thank you. By the way, don't just subscribe to my channel. Please unsubscribe instead. I don't give a fuck.
You want to see him focused on production and the Tesla story. And that's why these sideshows, and especially what we've seen with some of the stuff that he tweets, I think overall it's clearly been a negative, and it's something that investors have gotten frustrated with.
Yeah. So those tweets are negative. Yeah. All right, Dan Ives. Well, he did have one that I liked. He said, be the guy on the right. Did you see that one? Where the guy had like trees and happy view versus the guy, don't be the guy on the left who just had like a negative, crummy outlook of life. That was optimistic. I liked that.
I'm definitely on board with Nicole regarding the meme Elon posted on optimism and pessimism. Not only do I believe an optimistic outlook in life is the best, but I also believe that pessimistic people are literally toxic. So dangerously toxic, in fact, that they are not allowed anywhere the fuck near me. So just to quickly recap what we saw in today's video, Tesla, energy, virtual power plants, money printer, everyone's asleep on this. Don't say I didn't warn you. And lastly, don't forget to join Patreon with the card in the corner or the link at the pinned comment. I posted a super juicy video yesterday. If you're a number nerd, you're interested in Tesla, Tesla stock investors, retail investors, and a little bit more along those lines, I'm telling you, go watch it now. If you're not already a member on Patreon, you can sign up with the card in the corner or the link in the pinned comment. If you're already supporting me on Patreon, go watch that video now. I'm sure you'll dig it. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks, and get some free stocks and crypto. Check out the links in the pinned comment below. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. So check out the links in the pinned comment below, and thanks for your support. And if you're still watching, you're awesome. I read every single comment on this channel, and I really appreciate your feedback. So if you've got any thoughts on today's video, questions, comments, or suggestions for a new video, let me know in the comments below. Check the cards on screen now to browse the merch store, join Patreon, or watch the next video.